So before we actually get to this activity, do you remember anything? Well, the last thing that we have done concerning accounting information and all of that.
Well, I remember doing that activity where I created like a story and mentioning internal and external users of accounting information.
Okay, okay. And can you tell me who are the internal users of the
Like the employees, the managers, the who else? The investors. Yeah.
Okay, all right, good. All right. And what about the external
You have your
users?
customers. You have who else? The government.
Yeah.
You have what's the name of the? You have the tax agencies
Yeah.
or your auditors. Yeah.
Okay, yeah. Yeah, the external auditors. All right, yeah, good. Excellent. All right. So we're going to move on a little bit from that. And just as the second activity that I have is that I just want you to imagine yourself as an accountant, right? And you have this whole pile of paper to work with. And you see that it's not that organized, right? Can you discuss with me some of the outcomes that can come because of this? All of the paper and all that.
I guess confusion because as an accountant you need to be organized. They don't want to put down the wrong figure for something else that should not be there and put the business in problem because the money doesn't match with what you're saying.
Okay, true, true, true. And that is why, quite recently, with all the development of technology and software, we see now that businesses are using more of these software applications for accounting and all of that instead of using paper. And so you have like Excel and that you would normally use to like calculate um all of your numbers and all of that, and also many other apps that accounting firms would use. So yes, and so we see now that with the introduction of technology and all of the accounting apps, that these are actually solutions for accounting practices, and just as you said, that accountants need to be organized. So so the whole using the apps is one way that um accountants can have better practices and stay organized, as you said, right? Okay. All right. So the next thing that we're going to do is just we're going to look at the accounting equation. Not really too much, right? So if you want to calculate your capital, right? All you have to do is just okay. Right. So in order to get capital, you would just subtract your your liabilities from your assets to get out what the capital is. And then as you know, okay, and do you know the definition of capital, or what capital is to you?
It's the money invested into a business.
Okay, yeah. Okay, yeah. Yeah, yeah. Yeah. in this instance, yes, it is the money invested into the capital. Um, okay, yeah. So the assets can also equal the liability, right? But we'll see later down. Actually, no, on the next slide, how that would look like in the balance sheet, right? And then the assets, you can get the assets to equal. Sorry, the assets would also equal the capital plus the liabilities. And so to better illustrate that, I'll just take you to the balance sheet. Right, so here is the balance sheet, and unfortunately we can't see the other, oh dear, the total numbers, but these all of them are this, so, sorry, the total assets, the amount, and the total liabilities and the owner's equity is the same amount, right? And so you see that, as we said here, right, and that the assets, right, would equal the capital plus the liabilities. And so we can see exactly here how our liabilities, when we add our liabilities and our owner's equity, which is still capital, by the way, right? When we add both of them, how we get the same amount as the total assets, right? So just imagine that the that capital or owner's equity wasn't there, right? And say and that you had to find what it was. All you have to do is just subtract the current liabilities. Sorry, and not the current liabilities. The all of the liabilities, the total li- liabilities from the total asset, and you would get so the amount for the owner's equity. All right, and then these, and then in order, okay, yeah, and then for the same assets, since your assets would also equal your capital as well. So they're just referencing in that sense, assets are your resources and that you use to generate funds. Um, Capitals would also be the same. Sorry, do the same. Right? So now we're going to go into the double entry, and we'll see even later how the same how the double entry and all of that would help still in the balance sheet and also in the income statement, right? So we'll do that a little later, but just we'll see how the double entry works, right? So can you, okay, instead of reading anything from off of the slides, can you remember from school anything about the double entry?
That the debit side corresponds with the credit side or something along those lines.
Okay, yeah. But to just explain it a bit more, um, okay, I'll have to give an example actually.
Or you want me to explain it, or
Yeah, you can, yeah.
meaning like say you have like you have a company and you would have I'm trying to find the perfect. All right, so you have cash, no, capital, and I don't know, but there's always this thing in accounts like sec accounts where the first thing they would have, like, say you have capital and you would have bank. I don't remember how they phrase it, but you would always, you wouldn't always credit capital like in the reality, but in CSEC most times credit capital. Um, and you would debit bank, and
Mm-hmm.
the amount that you put on the credit side in the capital account
Mm-hmm.
must correspond with the amount that you put on in the debit side in the bank account.
Mm-hmm.
So it's, yeah. So if it's $1,000, it must be $1,000 in the credit account and $1,000 on the debit side of the bank account. Yeah.
Okay.
Right. Mm.
Yes. Okay, yeah, great example. Great example. Right, and just to also expound on that, the reason why you would debit the cash is because you are increasing your asset, right? Because cash is seen as an asset, right? And so to increase an asset, you would debit it, right? But you're putting okay, but then you're putting your money in a bank account of which you're getting ready to use, right? And so you would kind of like credit it, right? On the bank side, as you said, and that is actually the same example. Well, not the same, but it's a very similar example, and that we're going to see a little later as well, when it comes to debiting and crediting, right? But what you summed up is definitely true, right? So since you okay, so yeah. Right. So as you said, every single transaction affects two items in the company's books, right? So as you said here, there is a debit and a credit, right? And if you see here, okay, yeah. So I think that I have I generally explained all of that, right? But if it was a credit, as I said, right, you would to increase a capital or a liability, right, you would always credit it. A while you would put the account in a debit if it is to decrease that account. Okay, so for example, a liability would be wages, right? So yeah, so a wages is a liability, right? Um, and what account would that affect? What other account would that affect?
Their cash account.
Yes.
Yeah.
Yeah. Yeah. Okay. Yeah. Yes. I was just there thinking that. Yeah. Actually. Yes. And so your cash account, right? So normally, if it's an account, right? As I said, a liability, right? Sorry, an asset. You would debit the wages because you are decreasing your liabilities, right? But then you would credit your cash because you are withdrawing money from that same $10,000 and that you have placed in, you took out and like say 5,000 to pay each of your employees, right? So that is how it would work, right? And so how we would put all of that, we would put all of that into what is known as a T account. And so wages would be here, and then we would have your debit and credit, right? And as it says here, the T account always has a title. So now we're going to go into a little example, right? And this is indeed a one from earlier, right? Sorry, this is the same the similar to the example that you have given earlier, right? So on the 1st of November, Rockley Investment started a business with $10 million. So as we said before, cash is an asset, and so you would debit cash and you would credit um, capital, right? Because
Yep.
again, capital is seen hmm, is it's not seen as a liability, but something that you're getting ready to use, right? But then again, it all depends on the particular a situation, right? Or the given scenario, right? So so you would okay, but when it comes to financial recording, you don't actually put um your your records like this, right? It has to go into a very nice and neat format. So this nice and neat format is called a journal entry, right? And this is the same example as before. And so we would have the title or the name of the company above this. I didn't even put that, but yeah. And so we'd have the name of the company above here. And then we would have our title journal entry, and we have the date, the description, and your debit and credit, right? And so under all of your cash in bank, sorry, cash in, yeah, sorry, not cash in bank, but I know, yes, I know. Your cash, and then your capital stock. Sorry, your capital, right? And then you'd say exactly what was it used for. And so you said started with started a business with cash. All right. So now we are actually going to do um an exercise with that. Right? So you can take your time.
Should I be doing the T account for them or writing down if I debit or credit them?
Oh, yes. I'm sorry about that. Yes. You
Well
can
done,
do
well
it.
done.
Okay, sorry. As a journal entry.
Journal entry.
But you
But
can
everything
also.
cannot go in the same
I mean,
everything cannot go in the same journal though. That's why I was asking if I should be just saying, oh, you would credit this or you would debit that. I don't
Okay,
know.
yeah, okay, yeah, yeah. Yeah, you can
Alright.
do it. Yeah. Okay. All right. All right. So you can tell me what the first one would be. Are you ready?
Um, so I would credit capital and debit bank.
Mm-hmm.
For the second one, I would debit van and credit bank.
Okay. Mm-hmm.
April 4, I would debit office furniture and credit furniture limited.
Mm-hmm.
April 10, I would debit computers and credit bank.
Mm-hmm.
April 15, I would debit bank and credit T Thomas.
Mm-hmm.
April 16, I have returned outwards credit and I would debit cash.
Okay. Mm-hmm.
It's actually right.
We'll see. Go on. Continue.
Oh, you're just listening. Okay. April 18th, I debited furniture limited and credit cash.
Mm-hmm.
April 25th, I debited cash and credited bank. And April 20, I debited T Thomas and credit bank.
Okay. Mm-hmm. All right. So now I will show you what I have. Right. Can you see? Okay. All right.
Correct. Yeah.
Let me just zoom in. Yeah. Okay. So yes. I know that you were not sure about 22nd, sorry, 25th of April. And so or was it the 25th? Or
I
was it
think it was 16th. Yeah. Yeah, it was 16th.
okay? Mm. Okay. So I know that you definitely had these two correct. Yeah, so I wouldn't go through um
Okay,
those.
let me see.
Um
I've
I know that
heard.
you said that you okay, for four, which one did you have? I think you had said debited, sorry, credit something else. The company.
Oh, I said Credit Furniture Limited.
Right. Okay, right. So, you wouldn't put the name of the company. Well, you can put it in the a description, right? But you can also say sorry, put like accounts payable. Um,
But I can't go
hmm?
in the description. This is actually the first time I'm hearing that. But okay.
Okay.
Yeah.
Okay. Wow. Okay. All right. From Furniture Limited. Right. But
Mm-hmm.
in the description, you would put exactly who it's from and
Mm-hmm.
all of that. But I would have to check back if you can credit the company. I'm not sure, but I will have to check back with you.
I feel like when I was doing it, maybe it changed in at Cape, but when I was doing it in CSEC, I always made us put the company's name at the top,
Mm-hmm.
and each time the company's name is mentioned, you would know they're involved.
Okay.
So you would use their account for that.
Oh, okay. Then the next one. Oh shoot. Right. I have check. But that is supposed to be bank. So let me just make you are crediting bank. Right. Okay. All right. So yes. I know that for 15th, the 15th, I'm just going back to the right. Right. So right. So T Thomas. Okay, yes. Okay, yeah. And then I would just have sorry, wait, no. D10, sorry. D10 is when you okay, yeah. But right. So you would right. So
How is bank and
pardon me? My bad.
oh, for the 15th, I was asking how is cash and bank involved there?
Oh, okay. Okay. Oh, okay. Wait, let me see this 15. Oh, okay. All right. Okay. All right. So right. So remember that 10 that Thomas, Mr. Thomas, had lent us cash, right?
Mm-hmm.
And so our cash had increased. And so we would debit the cash. But
But
when
the,
we
it's confusing because they say it in the form of a check, which is where the bank would come in.
the 15th, right? It didn't say anything about the bank. Sorry, a check.
Oh, I see why now. Okay.
Yeah. Yeah. But still, if it's dealing, sorry. Okay. If it's okay, with the same 10th, right? Um, right. If it's still dealing with a check, right? You would still accredit the bank and not the check. Because even if you are dealing with a check, you would still have to deal with the bank. Sorry, the money or the bank and that the sorry and that the money and that the check or the thing or the account is being held right in the bank. And so whether it's a check or credit or whatever, you still have to deal with the bank per se, right? And so that is why I had debit place bank when I was crediting for both the 10th and the 15th.
I understand the 10. Is I have a debit bank and credit T Thomas. That's why I was asking.
Mm-hmm.
The question, he lent the business 10, 100, yeah, $100,000, and this was placed in the bank.
Okay, all right. All right. So just think of it like the
On the business
first
perspective, not
yes.
T Thomas. Yeah, I get that. Just remember that. T
Okay.
Thomas lent the business that. So you would debit the cash and credit the bank.
Yes.
Okay.
Yeah. So it's kind of similar to the first question. Sorry. The first transaction. When we had started the business with the $1,000, we may not have so okay. Well, it didn't say right. Whether we got it from savings or whether it was loaned to us, right? And but we know that we started the business with this set of money, right? And so we're now having to place it in the bank, which we're going to. credit, right? And so it's kind of similar to the transaction with the 15th. It's just that someone loaned us the money. Great. All right. So,
Wait, wait.
go ahead.
Are we going through the others?
Yeah, 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 yeah,
No.
yeah.
Okay.
All right. So now for the 16th.
Mm-hmm.
What is it again? Right. So it says return some of the office furniture which was in the wrong color. So then we valued it at $20. Right. And don't mind, I have it. That was actually the wrong thing. It isn't accounts receivable. That is my. Okay. It would be the same returns outward.
Mm-hmm.
Yeah. Yeah. I can't remember the term that my teacher would use, or my teacher used when dealing with this one. But I do remember in your textbook it did say about returns outward, right? And that was actually the first time I have ever heard returns outward. If you're returning anything, as you said, it would be returns outward, right? And then we would credit the furniture because we're taking it back, yeah. And we're taking it to assets, right? A decrease in assets, you would.
Wait, so you debit the returns outwards?
Pardon me?
Or you debit the returns outwards?
Yes.
Why?
Okay. Because okay. Hold on. Okay. No. Okay. Okay. Oh my goodness. I have looking for an explanation. Okay. What was the account? Trying the explanation. Well, I'll go by the sound. But anyhow, but remember that this is a double entry, right? And we know that the furniture, which is an asset, is being
Bye.
debited,
Yeah.
right? So if we
Mm-hmm.
credit credit the furniture, we would have to debit what is being taken back. Okay, sorry. Because to increase an
I see
asset.
it's because it's a reduction in the expense of the business.
Yes. Yes, yes, yes. Yes. Yes.
Alright, no
It
problem.
says the return outwards, right? Okay. A sense it is in the wrong color, right? And even though it is an asset, right now it is a liability because it is in the wrong color, right? And so we have no use of it. So in order to decrease a liability or anything of that sort, we would debit, right? And that is a way we would put the return outwards into debit. And that is actually a better explanation, right? So you understand? I hope that's much clearer. So I was saying, and that
Yeah.
once the furniture is in the wrong color, right?
Mm-hmm.
The company doesn't, sorry, has no use for it. So it is seen as a
Yeah.
liability. And anytime and that you are trying to decrease a liability, you would debit it. So that is why we are debiting the return.
Mm-hmm. Yeah, I understand.
Okay.
Mm-hmm.
All right. So, yes. Right. So now we're going to go to expenses. Okay. And the thing that with expenses, it is seen as a liability. So, as I said before, any single time and that you have an expense, you would debit an expense to decrease an expense.
Let me see the question again, please. I have
Okay.
furniture.
Okay.
Which question?
Mhm.
Pay the amount owed to Furniture Limited.
Mhm. Yeah.
I had Furniture Limited debit and credit cash.
Okay.
So how
Furniture.
did the furniture expense come in?
Okay.
Mm-hmm.
Oh wait. You had said you had a what?
Furniture Limited, like the company.
Oh, okay. Okay.
Mm-hmm.
Because okay. Because as I said before, and that the furniture, it is something that we bought, right? So it is an, even though it is an asset, it is still an expense, right? And that we had to use our money to purchase it. So it is seen as an expense. So that is why I had a furniture expense.
Thank you, Truckston. You can sit down.
Oh, okay. I feel like I kind of forgot that there are accounts that could be named like that.
Yeah, yeah, right. So, and as I said before, like usually you would debit an expense, and credit or whatever else, right? And so if you are trying to decrease, sorry, a liability or an expense, you would debit it, right? And if you're trying to increase an expense, you would credit it, right? But right here, we are dealing with a cash account, right? So we're actually going to credit the cash account because we have paid it in cash, right? And so we are going to be decreasing our asset, which is the cash account. And so we would debit the cash.
Yeah.
Okay. All right. So now we can. So you understood all of that.
Yep.
So, okay. Good. Excellent. All right. So now we're going to go on to 25, and we'll see what 25 says. Okay. So we on the 25th we withdrew $10,000 from the bank and placed it in a cash account. So, right. So we have cash in the bank, right? And they decided to withdraw it, right?
Yeah.
And wherever place that our cash in hand, right? We have increased that by $10,000. So that is why we would debit the cash, since we're increasing our asset, right? And since we are withdrawing money from the bank,
Uh-huh.
we would be decreasing our capital, right? And so we would credit the bank, right?
Yep.
So and then the last one, we paid half of it from T. Sorry, Thomas. Oh, we have a loan, right? And that we have to pay, right? And so a loan is considered a what account? Or right, is it considered a liability? Is it considered an
Liability.
okay, all right, yeah. So it is considered a liability. And as we said before, um what happens is that when we want to decrease a liability, we would
Decrease the liability. Uh, let me try and remember. Let me use the asset as an example then. Because I'm not remembering the
it's
liability.
actually right here, oh, in this column. Right,
You
so
debit it? Oh,
yes.
yes, 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 yes. Oh my god, it's just coming back to me. You would debit it.
Okay, all right.
I'm just remembering that accounts payable is a liability. Jesus.
Yes, all right, that happens. That happens to all of us. Right. So yeah. So we would debit it, right? And since we are using our money, because it didn't say anything about cash. Sorry, about a check or a bank. So we would have to assume that they're using cash to pay back, right? And so
Oh,
they
okay.
used half of it. Sorry, they paid off half, right? And so remember how much, right? So from here, from the 19th, remember that T. Thomas had loaned us $100,000, and so
Yeah.
we divided that by half, we get $50,000. So right, so yeah. So I hope you guys now understand everything and understand why, yeah, this is the way that it is. Right?
Yeah.
So I guess I find another one. I can give it to you for homework, and then next week we can um
You mean Friday?
yeah,
Yeah.
yeah, on Friday next week we can go through it. Right. So remember earlier how you had said that you wouldn't put it into every I put all of the transactions into the same journal.
Mm-hmm.
I okay. I understood what you said that. But in here, we saw that you can. However, it is placed into different books, right?
Mm-hmm.
Such as the cash book.
Yeah.
So, like, for example, with the same cash book and having, sorry, okay, let me go back to the cash book and see. All right, so it says here and that the cash book are records receipts or payments and then cash transactions in general, right? And so we would put all of the cash transactions and that we have made only the cash transactions into the cash book,
So much.
Yeah.
right? And
Yeah.
can you
Mm-hmm.
tell me all of the cash transactions and that were taking place in this same example?
In this,
Yeah.
where is it? Cash and bank. Cash and bank is included, right?
Yes.
Okay. So you would look at April 1st. You would look at April 15th.
Mm-hmm.
Came off. Mm, okay. You would look at April 18th, 25th, and 30th.
Okay. Yeah. Yes. Okay. Yeah. Wondering too,
Mm-hmm.
if you can also put um the bank, sorry, in terms of the check in cash as well. I will have to do a little more
Wait,
research
let me look
into
at it
that
though. Let me research a cash book. Let me look.
because even though it's not, and I don't think there is a general book for like
Yeah,
bank or anything like that,
yeah. You
right?
have a
So,
column for cash and you have a column for bank in the cash book.
oh, okay.
Wait, yeah, you do.
Oh,
Mm-hmm.
okay. All right. Excellent. All right. So yeah. So the third would also go into the cash
Yeah.
book.
Mm-hmm.
Right. So yes. So good. Okay. All right. So now we can actually look at the sales. What's the the day sales book or the journal. I would actually I kind of I use the day sales instead of the journal because then it would kind of confuse me. Well, me personally, a bit with the journal and the actual and day sales. So for me, personally, I would actually I use the sales day just to distinguish the two, right? But anyway,
Mm-hmm.
but that book is used to record the purchases on credit, right? So,
Mm-hmm.
right. So, do you know what the on credit is, or do you remember what it is?
Me, what's how do you? I'm trying to remember what my teacher said in class. Um, so when you're looking at most or on credit means you didn't really pay for it, kind of quote unquote Jamaican terms. You trust the goods, so you're going to pay it at a later date.
Mm-hmm. Right. Excellent.
Mm-hmm.
Yes. Yes. Excellent. All right. So yeah. So, do you see any cash on credit here? Sorry. A purchases. Sorry, on credit here that were made.
So, oh, April 4th.
Mm-hmm.
Yeah, that's the only one I see. Can you go back on the actual transactions, please?
Okay.
Um, goods and credit. Yes, so April 4th.
Mm-hmm.
Um,
Yeah.
yeah, that's the only one I see.
Yes. Yeah. 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 So yes. is, right? So as we had discussed a bit earlier, the return outwards
Yeah.
would record any stock that we had purchased and that the company had purchased, but it had for some reason returned it back to the suppliers, right? So it may okay, right. So for that, can you see any returns outward happening?
Yeah, we discussed April 16th.
Okay, right, excellent. Right. So and so you probably know that the reason why, well, the reason isn't only limited to wrong color, um but it may also be that the products are defective, and so they need to return the products to the supplier so that the suppliers can sort that out, right? But there are many reasons why return products can be sent back to the suppliers, right? And so now we have return inwards, um, which are any stuff or goods that has been sold by the company, but has been returned by the customer, right? So to your remembrance, is there any return inwards, or do you know also,
No, there wasn't any. Mm-mm.
okay, all right, good, right. So right, and then the last one is just the general journal that is used to record every other transaction that is not recorded in the return, the book, or the sale, or the cash, right? It's kind of strange, right? But anyhow, but that is what was in the textbook, so I just wrote it there, right? But we did see, honestly, that within the general journal that there is a whole list of transactions which are included, authorized that are all within the journal.
Oh, so this that you have here is a general journal?
Yes.
Okay, okay.
Right. So this is the so yes. But is this how it's done in real life? No, honestly. I've never accounted, however. Yeah, I'm not sure, but if I was ever to meet an accountant, I would ask them. Oh, well, I actually have a friend who did accounts and is working now, so I would probably ask her. This actually happens in real life, but I know that you said that you don't want to be an accountant, so it shouldn't matter because it's not like you're gonna be doing it for a business anyhow.
Nope.
So yeah. Yeah, so even though we have more to cover, I'm gonna finish it. It's gonna pass our time now.
Mhm.
We will continue the rest, such as looking at trial, balances, and the balance sheet, and the income statement, and all of that next. Sorry, on Friday. On Friday. But there is one thing that just know, and that there's also adjusted
Mhm.
T accounts as well, right? So take for example the same transaction on the 30th that we had done, and also the 4th of April and the 30th, right? And so you see how we had to pay half of the
Loan. Mhm.
sorry, and that we had to pay back half of the furniture that we had bought on credit. We would make all of these adjustments in the adjusted T account. And so we would have like on the actually no, I'm not going to do that. No, but I'm just telling you and that you would make all the adjustments on the adjusted T account before you
Is that
actually.
the suspense account? No.
Pardon me.
I was asking if that would be the suspense account or no.
The suspense account. Sorry.
Why do you sound so confused?
Wait, no, because wait, hon. Did you say a suspense or expense?
Suspense account. Because you were
Expense.
talking about adjusted stuff and stuff.
Okay, okay. I have never heard that term before.
You
Suspense.
serious?
Yes,
But even
I
if
have.
you say like that's something you have to know about suspense, I'm gonna look it up and actually be a professional definition of what it is.
Okay, okay.
So, a suspense account is a catch-all section of a general ledger used by companies to record ambiguous entries to require qualification. Suspense accounts are routinely cleared out once the nature of the suspended accounts are resolved and are subsequently shuffled to their correctly designated accounts. So, something like that.
Yeah. Okay. Yeah. So something.
Something like that.
Yes. I'm not sure if it's that per se, because this
Yeah.
is the first time I've ever heard of a suspense account.
Mm-hmm.
But yeah, but according to the a definition, it is something like
Like, yeah, something like that.
right. So yeah, and so you would usually do the trial, the yeah, the trial. Sorry, the adjusted T accounts, just to make sure and that you have all of the correct information and that you have calculated every single thing right, and then you would put it in the format of a trial balance, which just looks like this,
Mm-hmm.
right? And so you,
What's
and
that? What's
so
that?
you would have it on one, all of that on one side, and then sorry, all the debits on one side and all the credits on the next side.